Hello, everybody. Jason Cole here with Mortgage Mondays. I had some questions last week as far as question number one, explain the debt ratio. Answer for that is mortgage professionals use two main ratios to decide if borrowers can afford to buy a home. There's the GDS, which is the gross debt service ratio, which covers the housing costs. That's your mortgage payment, including your principal and interest, also your property taxes, heating costs, and condo fees if it happens to be a condo. And usually this ratio must not exceed 39% of your income. There are scenarios with some lenders and some insureds that number is even lower. The second ratio we have is the TDS, which is the total debt servicing ratio, which covers the housing costs and other debt. So you take the cost from the GDS and you add in your other debt obligations, such as credit cards, lines of credit, personal loans, car loans, etc. And usually this must not exceed 44% of your income, but just like the GDS, there are certain situations with certain lenders and so forth that this number could be even, needs to be even lower. Thank you. Hello, everybody. Jason Cole here with Mortgage Mondays. I have another question here as far as what would the mortgage be on a $250,000 home? So as far as the mortgage on a $250,000 house purchase, the minimum down payment required would be 5%, which is $12,500. And just a little thing here with the stars is down payments could be anything from down payment sources, a self-save down payment, gifted down payment, or even sometimes a borrowed down payment. So as far as if we subtract the 5% down payment, we have a loan amount of $237,500. So from there, we add in the insured fee of $9,500, which is 4% of $237,500. So as far as the insured fee, there's three insureds: CMHC, Canada Guarantee, and Genworth. So as far as with having the opportunity to purchase a home with as little as 5% down, there is that 4% insured fee tacked on. So we get a total mortgage amount of $247,000. So as far as today, we have interest rates as low as even under 2%, and some getting higher, up to 3%. So for today's example, we're going to use a 2.5% interest rate amortized over 25 years. So the monthly payment, I did a calculation here on my computer, principal and interest, so total payment would be $1,106.48. And then we always have to add in a component for the GDS as far as for the property taxes. So as estimate here of 1% of the purchase price, which broken up monthly would be $208.33. Heat estimate of $125, and so as far as total payments would be $1,439.81. However, for the GDS calculation, we have to use a higher interest rate, which is called the qualifying rate. So as far as today's rate, it's actually just changed recently. So it's a qualifying rate of 4.79%, which would raise your monthly payment for the GDS calculation of $1,407.18. Thank you and have a great day. Here you have my contact information as far as my cell number, my email address, and as far as my website as well.